Hello friends, welcome back. Yet another edition of Technical Tea. And today I have a lot of surprises for all of you. So ensure that you watch the entire video and especially till the second half of the video where there are some very interesting chart patterns which I have lined up. So today on Technical Tea we'll be discussing on the global market indices, what's actually happening in the US market and which is that one index in the US market which surprisingly is showing a very strong recovery or a strong price trend. And surprise, surprise, it's not the US majors, it's not the Dow, it's not the Nasdaq, it's not the S&P, it's something else which is shaping up there. Then we'll discuss on the Indian indices, what's happening on the technical front for the Nifty and the Bank Nifty, what are the views, the supports and the resistance points which are lined up ahead. We'll look at the options payoff as well, how the options traders or the options open interest is spread across. We'll look at the commodity aspect, and there are two interesting commodities. One, of course, on the bullion side, and the other is a very interesting commodity which has managed to give a very strong leading indicator breakout, I would say, from a multi-year perspective. So this is something which is going to be a very important takeaway for not just the short-term trends but more on the longer-term trends for the commodity asset class. And then of course I'll be revealing the steel stock which I discussed in my earlier video. So what is that steel stock and what stock is looking attractive? Plus, at the other hand, I also have one more stock which I think is looking exceedingly strong. There have been two such breakouts historically for the stock in the last so many years, and both these breakouts apparently had given a multifold return into the stock price. And this time, the stock is poised for such a kind of a breakout. So we'll discuss in detail, a lot of these factors. So let's start off first on the global front. We all know what's happening in the US markets. After a September high or a top towards that 29,000 mark, the Dow Jones apparently went through a correction of almost 10% and more, and then gone through almost a V-shaped recovery. So as you can see, this is the Dow Jones. We've seen a V-shape, a sharp correction, and almost like a V-shaped recovery. This is the Nasdaq. This is the S&P 500 chart. It doesn't come as a surprise that these three indices are moving in a synchronized manner, but there is something else which is transpiring in the US markets, and the rally apparently which you've seen, and I'm talking of this rally, the rally from the September end bottoms on the US markets is not led by large cap names. It's apparently led by the small cap index. So as you can see that the US markets have gone through, or the Russell 2000 has gone through a strong bounce, much stronger and outperforming finally even the the large cap indices, whether it's the Dow, Nasdaq, or the S&P. So this is where relative basis US markets or the Dow Jones indexes placed, but the Russell 2000 index is clearly outperforming over here. As you can see, it's almost an outperformance of more than 5 to 7% in this recent leg of rally. So this tells you net net that this is a small cap driven rally for the US markets and the US majors, and this is one very important index to take note of. We'll then look at a couple of Indian indices, the Indian index, and the two key indices, which is Nifty and Bank Nifty, which we keep discussing regularly. Now there are again very interesting chart patterns lined up over here. As you can see, this is a bearish red bullish bearish engulfing pattern on the candlestick fund for the Nifty, and post that bearish engulfing, you can see the small green candle. It's a minor fight back from the bulls. Now this was a very strong indicator of a resistance being developed over here and a support being developed over here. Now the reason why this is important, this pattern or a club of this pattern is important, because as you can see that this bearish engulfing pattern managed to engulf almost 5 or 6 candles prior to that. 5 or 6 bullish days it managed to engulf and absorb, and then it gave you a bearish engulfing. The effect of that was that the index remained in a slight downward bias. Now this resistance was again retested. The markets or the indices failed to retest and break above this resistance, and we saw a sharper correction. You saw this same pattern for the Nifty panning out over here, a bearish engulfing which managed to engulf almost the last 4 or 5 days of the price pattern, then a minor fight back from the bulls. But then what happened was a follow through price action. Now this follow through is something which is very important. So if the index manages to see a follow through over here, then you're talking of a multi-day high or a multi-day rally which could be lined up for the Nifty. Once again, you saw an attempt this time around as well, where the index formed a bearish pattern over here. It's not a bearish engulfing, but again, as you can see that the index opened with a gap down. Next week was a minor attempt from the bulls, and then we saw a follow through price action. The moment the previous high was taken, you saw the index going into a strong upward trend. Again, a very similar kind of a pattern, a bearish engulfing kind of a pattern over here, then a mild follow through from bulls. But then the moment the Nifty managed to break the previous high, you saw a new rally coming into the indices. Again, so this is where we are landing. We are at current juncture. The Nifty is formed a bearish engulfing over here yet again. As you can see that in the Friday session was a minor pullback in that regards. But what's lined up ahead for the week post that is whether the Nifty is able to scale past above the previous level of 12,000. But if it happens, then you're talking of an altogether strong trend in the making, and a very, very, very strong possibility of the Nifty even hitting back the new highs for itself. So this level is going to be the utmost important level. That's the 12,000 mark on the Nifty, as indicated in the previous patterns as well, that the 11,600 mark, approximately 11,600, 11,650 zone could actually act as very strong support zone for the Nifty over the next 1 to 2 weeks. This is how the bank Nifty charts are shaping up. Again, very interesting, as you can see from 25,200 September highs, where the August September highs where the bank Nifty had tested. It went through a correction of almost 5,000 points, 4,600, 700 to be precise, and from there you saw a rally. Now this rally which panned out for the bank Nifty was a exact 61.8% retracement rally. So which means again this categorizes that the 24,000 mark is a very important resistance. Now, as you all know, Fibonacci retracement is a very important retracement. Either it's a resistance or a support, whichever way it plays out. But the moment this resistance gets taken out, and we see this on convincing basis that the bank Nifty manages to surpass about this 24,000, 24,100 level, then you're talking of a possibility of a full-scale reversal even for bank Nifty, which means where does this land up? This indicates that the 24,000, 24,200 mark would be an important zone of resistance for bank Nifty. If we scale past above this, then there is an altogether strong possibility that the bank Nifty could yet again come back into a leading indicator breakout for the next leg of rally for the Nifty. So watching the bank Nifty and the trends is going to be extremely important for the next 1 to 2 weeks. Then we come back to the bullions over here. Gold, as you can see, has been consolidating. I had done an earlier YouTube video on gold as well. If you guys can just check the YouTube video, it's a very interesting chart perspective which I had highlighted for gold, and why that the consolidation is a very important indicator of a probable breakout which could happen for this asset class, and what are the levels to watch out for over there as well. So you can check the video on the YouTube channel as well. And then we land up to one of the other asset classes which is showing an extremely strong breakout. Now Ichimoku pattern breakouts, these are monthly charts for copper, but as you can see, after quite a bit of a drubbing the asset class had seen, and this is 2013, so almost for a period of 6-7 years the copper was going through a downward drift. But for the first time, as you can see, the Chikou span, which is the Ichimoku indicator, has managed to come back and surface above the cloud. Now both the prices as well as the Chikou span, both are trading above the cloud, which could probably be an indicator that this could be a start of a multi-month strong uptrend for copper. So again, very, very interesting asset class trends which are shaping up. I thought I'll share it with you guys. And then of course, we look at the options payoff. This is how the calls and the puts payoff is for the monthly expiry on the Nifty options. As you can see that there is a high built up at the 12,000 and the 12,500, which are the strikes, the round of strikes for the indices, and that's where you generally tend to see very high position building. For the Nifty, surprisingly, for the Nifty put options, surprisingly, the 10,500 has been a very high kind of a OI built up strike for the put option, and then you have spreads at 11,000, 11,500 as well. But again, the reason why this 10,500 put option has seen the highest open interest is because the start of the October series, the Nifty started the October series at 10,800 levels. So the memory of the markets or the bulls was to try and hedge their positions at 10,500. Using 10,500 put options, and which is why those hedges still remain. Anyone who's probably went long on stocks or on futures and hedged it with the put options, they're still holding on to their positions over here. But of course, the premium has dropped considerably from those levels what it was in start of October series. Then this the the normal open interest built up in terms of stocks. As you can see, UPL, which saw a sharp correction on Friday's session, was down 7.5 or 8%, but there was a strong build up of open interest, almost a 50% rise in the OI for UPL, which again indicates that there was a fresh short built up which happened over there. DLF surprisingly comes into the list for after quite some time. The stock was up 4.5-5%, but the open interest was almost 13%, and this comes as a bit of a positive surprise for the stock and for the sector as well. Infosys, TCS, as you can see over here, there has been an unwinding of short positions. You saw some recovery coming into the both the stocks. Infosys was up 1.7%, TCS was up 0.8%, and some of these other names where you saw long unwinding. Escorts, which was down some 2.5%, PVR, which is again struggling just around the 1200 mark. We saw some unwinding over here, and then open interest also dropped by almost 6 to 4%. So these are mild drops in the open interest, not significant enough, but the significant ones to watch out for is UPL as well as DLF. The stock which I indicated in the earlier YouTube video on the metal major is Tata Steel. Of course, you must have guessed. Many of you guys have guessed it perfectly. So kudos to all of you. Fantastic guessing from all of you guys. Of course, as I said, it's a brilliant chart pattern. It gels in very well with a lot of the commodity themes and commodity charts which are shaping up on the monthly time scale. So again, this looks extremely interesting. But there's one more surprise for all of you guys, and that this stock. This is an interesting, this is not the chart, of course, price chart. This is the indicator which I have mapped up. And as you can see, that there were two historical attempts or two historical confirmations of a breakout of this indicator. So whenever the red line manages to cross over the blue line after a significant amount of drubbing, you see the stock going into a multi-year uptrend. Now, as you can see, this first breakout which happened in 2002, the stock was priced at 3.5 rupees odd, and in just a matter of 4 or 5 years, we saw the stock rising from 3 rupees to almost 37 rupees. So it's a return of almost 10x in a span of 5 years. Now, something interesting panned out even here as well in 2009, 2010, when the stock had given us such a kind of a similar breakout. Of course, the prices over here was almost 36 rupees for the stock price, and from 36 rupees, you saw this index, you saw the stock climbing as much to 2,200. So you can start your calculators over here and look at the multiples. This is a phenomenal multiple which the stock had given from current levels. And this is the third time. As you can see, the stock is now getting extremely, extremely close towards a breakout of the third time. And if the stock is third time lucky, whether the history will repeat itself or not, whether this is just the only indicator or there are more other indicators which are leading to a similar kind of a conclusion. Now, if you want to know the stock, of course, all you have to do is leave a comment on the comment box, and I will ensure that I'll come out with a video on this surprise stock for all of you guys, and especially for the ones who definitely leave a comment. So guys, if you liked the video and if you like my analysis, do ensure that you do like, comment, and share the video. Don't forget at all to subscribe, because then there are some very strong surprises which I've lined up for all of you guys, and surprises which can of course boost your portfolio by a significant amount. So thank you so much once again. Don't forget to like, comment, share, as well as subscribe, and hit the bell notification button as well. Thank you.